Hello, all, and welcome back. Today I'm going to talk to you about another tool that I created for you to determine when is a company possibly overvalued or undervalued, um, along with some of the other Greer indicators that I created. This can become a powerful tool. And what this is called is the Greer Free Cash Flow Yield. This is a long-term value signal. And basically, it's another part of the Greer Financial Toolkit designed to help long-term investors identify fundamental, strong, and potentially undervalued companies. It actually, what it does is it calculates the free cash flow per share. So that's just how much cash the company is generating from its revenues. And I take that and divide that by its current stock price to produce a free cash flow yield percentage. And this it also tracks the static average across all of the available financial years, and I'll kind of dive a little bit deep into that as I walk through the indicator. But all the things that you really need to know is that when the line is green, that means it's above the average of the static um, average over the financial years. That can signal a strong value time to get into the company. And then when it's red, it's when it's below the average, it could be a weak value signal, meaning that maybe you want to take some profits or um, reconsider your position. Why it matters is that the free cash flow yield, it's a powerful metric because it reveals how efficient the company turns its revenue into usable cash. And this can be a better long-term value indicator than earnings yield or PE ratios, especially in capital intensive industries. So, for example, if you're buying a company just for its dividend, if it's not generating more free cash flow to pay that dividend, then how long they can sustain that is to be determined. So this can help you alleviate that type of question. Also, it's as I'll show later in this video that if you combine this with the Greer value tool and the Greer buy zone tool, it can be a very powerful tool to help you determine when do you want to start to acquire more positions into a valuable company. So let's go into that and let's turn on the tool itself. So it's a free cash flow yield, the Greer free cash flow yield. And as you can see here, um, when the here this blue line right here is the average over the years of its percentages. You can see right here the blue is 1.65, so 1%, almost 2% free cash flow yield based on how much cash flow they're generating based on what the current price is. And as you can see, the that's the average, and then you can see when it goes over the average, when it turns green, this might be that the company is actually undervalued. This is Chipotle in this example. So when it's green, it means that this is undervalued. Might be a good time to accumulate. And when it's red, it might be overvalued and something that you might want to start taking some profits or reconsider your position. Now, what I like to do is combine this with the Greer buy zone, and now you can start to see when this is green and this is red, it's almost like a double confirmation that it would be a good time to actually start to buy into that. Again, here's another one, green, red. Now it started off green and green, but when it hit the buy zone red, this might be a time to accumulate, as you can see. And then just recently, CMG is right now it's red and green, and so this is a good time. Now, on top of that, you might want to look at it and say, well, this is fine, but is Chipotle a strong company? Is it a valuable company? And then with the Greer value tool, you can see that it's in the 70s. The GVs are in the 70 plus range. And anytime a company is over 50%, consider that a very strong fundamental company. So along with the Greer value of a 76, we're currently in the buy zone, and the free cash flow yield is greater than the normal yield. That means that it's undervalued, and a very solid company that is undervalued. Now, this is not always the case for all stocks. I mean, you can look at Microsoft, for example. I was still buying Microsoft in this buy zone, even though their free cash flow yield is way lower than the average. Now, a lot of this has to do with because of the big run up that Microsoft had over these last years. It's been running up quite a bit. So this is not a standalone tool to determine long term when you should get into a company, but it's just another indicator that you can use on top of these other Greer toolkit to see when you should jump in. Now, if you go back in the 2010 area, you can see that Microsoft did hit it. Now it was a value of 58, it was in the buy zone, and the free cash flow was greater than the average. This is a very strong time to start to accumulate a very strong company. As we know, over time, Microsoft's done very well. Again, Nvidia is another one. You can see right now, recently it's under, but you can see back here these were some really good times to get into it. Now the Greer value was low here, but this was above. So you have to take it, and use all of these statistics together to determine when you want to start to acquire the position. So back in 2014, Nvidia was only a 46 Greer value, but it went from 46 to 52. This might be something, if you were watching this stock, you might want to start to start to get into it. And you would have got into Nvidia back when it was worth 50 cents. This is before the stock split, so you could have made a lot of profit on it, on this way. Again, even though it's below, doesn't mean that you shouldn't get into it, but it's just another indicator that you can use if you are trying to decide between a few companies. You might want to use this new Greer free cash flow um, tool. Here's one. Arista Networks is a good example of, it's a 65 value, it's in the buy zone, and the free cash flow yield is above its average of 2.49. It's in the 3 range. So hopefully this is helpful for you with your investment journey, that you can use a tool that you can use to your advantage. If you have any comments or suggestions or questions, I would really appreciate your feedback. Have a good day.